It's Aaron Levine, LG Insurance. I'm sitting in the studio today. We were shooting a few podcast episodes, and I wanted to do a quick update with respect to what's going on with the National Flood Insurance Program, with FEMA. There's some changes that are coming about on October 1st. Risk rating 2.0 is what FEMA's calling it for the National Flood Insurance Program. It's been in the works for quite a few years. You may have heard of it. If you're a realtor, you should be aware of it. If you're a mortgage lender, you should be aware of it as well. It's not taking flood insurance away. It's just the next iteration of how flood insurance is going to be rated by the National Flood Insurance Program. So this is strictly for NFIP. It's kind of modeling how a lot of the private insurers are working with flood insurance today, using data other than an elevation certificate. So I think it's important to understand what's going on and how it's going to affect consumers, homeowners, builders, and kind of anybody else in between. So October 1st is the official launch of Risk Rating 2.0. We can quote this now for new purchases, for new business starting on October 1st. Renewal business starts to take effect on this new rating platform in April. In most cases, we're not going to see drastic changes if you have current insurance in place. If you are going up in rate significantly, there will be a grandfathering in that helps tier it up a little bit, right? So coverage, number one, is going to be staying the same. In the National Flood Insurance Program, coverage is still going to be $250,000 for dwelling, $100,000 for contents for residents, $500,000 for building coverage for a commercial building, and $250,000 in business contents for a commercial building as well, right? So the coverage is going to stay the same. The way things are rated are going to be a little bit different. The use of an elevation certificate will only be helpful for the most part if the data is off that FEMA is pulling, right? FEMA is going to be pulling a lot of data from tax records, from map overlays to kind of determine how things get put together. But they're going to be using distance to water, period, distance to the coast, the elevation of the first floor. Where's the first floor with respect to ground level? That's going to be important. What the replacement cost is of the home is going to be a rating factor. Flooding frequency in the area is going to be a rating factor, as well as the different foundation types. Now, prior NFIP insurance had 9 different foundation types. Risk Rating 2.0 has only 6 different foundation types: slab, basement, crawl space, elevated with enclosure, elevated without enclosure, on piers and pilings. So these are going to be the different, rating factors that go into it. It's going to make things a little bit easier to rate, and it's going to be more in line with how the private companies are currently pulling some of their data. With respect to private flood insurance, it's important to understand that on the private side, we can go higher in coverage values. Right now, we can go up to $2 million in replacement cost on a flood insurance policy. It's important to have, those numbers in play. And when you have those higher limits of coverage, you're going to get a better definition of coverage. So right now, it's actual cash value if you have your $250,000 of coverage. If you go full value, you can get full replacement value. So you're not going to be hit with that depreciation effect of an insurance policy. We also have certain insurance companies in place right now where flood is a part of the homeowner's package. So it creates a homeowner's insurance policy package that adds flood as a covered cause of loss. 2 important things to note: 1 deductible, and 1 adjuster when it comes claim time. Not to mention the fact that you have full coverage for up to your dwelling value, as well as full loss of use, which you don't get on the NFIP policy or in most private policies. That loss of use, if a flood comes, your home gets damaged, you can't live there for 6 months of time or more or less, right? You typically wouldn't get any coverage to move out and have to live and rent somewhere else. If you have flood as part of your homeowner's package, you're going to get that loss of use included, which is super important. So if you have any questions about flood insurance, have any questions about a home you're buying or a home a client is buying and want to get the numbers, reach out to us at LG Insurance. The staff is fully versed on what's going on with 2.0, is ready to help with NFIP quotes, with private quotes, and with combined package home and flood quotes as well. And we're more than happy to discuss any of these changes that are going on. And come October 1st, if your closing is after October 1st, we need to put a new policy in place for you on this 2.0 platform. So the rating could be a little bit different. One more thing with respect to elevation certificates, they can only help with the rating to make sure that data is correct. And if it's new construction, we're going to use course of construction elevation certificates to make sure that the home is going to be built to that proper elevated level. So again, it's Aaron Levine, LG Insurance. If you have any flood related, home insurance related, business related insurance questions, please don't hesitate to reach out. Thanks.